TFI International, formerly known as Transforce, trades around $200, $16.92 billion market cap, pays a small yield, 1.1%, but it has grown its dividend. They, again, like I said, TFI is formerly known as Transforce, has grown rapidly through acquisitions and now stands as the largest trucking company in Canada. Operations span the spectrum of North American trucking from package and courier, or P&C, to less than truckload, or LTL, and truckload, which is TL, and logistics. I will quickly point out that TFI International stock has performed very well over the past 5 years and all time for that matter. You can see a chart here over the past 5 years. See, the stock is up 357% over that time. Long term, it's hard to bet against the execution from this business. But let's take a quick look at the current fundamentals for the business. Now, this slide should give you a snapshot. There's a lot of numbers slapping you in the face there, but over the past 10 years, you can see steadily increasing revenues over that time. Note the post-COVID pent-up demand and increased pricing spike period. That would be 2021 to 22, and the pullback in 2023, but generally an upward trend through the past decade. Gross profit or earnings and earnings from continuing operations and normalized EPS follow the same trend. Net debt has increased over that time, but at a lower pace than revenues and earnings, which is a good thing. And the share count is actually down over the past 10 years from share buybacks. It's a good sign and one we don't often see. Let's look at the last quarter. Revenue was flat at $1.9 billion, essentially before fuel charge. After that surcharge, it's $1.67 billion, just up slightly from $1.62 billion in the prior period. Operating income here dropped to $198 million from $216 million in the same period. Net income dropped to $131 million from $153 million. Adjusted Q4 2023 net income was $147 million, down slightly from $151 million. EPS was $1.53 for the quarter, down from $1.74. Adjusted EPS was basically flat at $1.71 for Q4. Net cash from operating activities grew 22%, and free cash flow was up 29%. Generally, TFI is experiencing a period of weaker freight demand, but has kind of capitalized on this period of solid cash flow by significantly investing about $2 billion of capital during 2023 into announced acquisitions, a number throughout the year, and share buybacks. Let's take a quick look at the balance sheet here. Just a quick summary there. Cash is about $335 million. Debt is $2.34 billion, and net debt is about $2 billion. The valuations, in summary, EV to adjusted EBITDA on a trailing basis about 13.3. EV to adjusted EBITDA based on forward-looking numbers is 12.2. The PE right now is 21 trailing, and going forward, it's around the range of 18 to 19. So conclusion here, there are near-term headwinds that remain industry-wide. We can look at some of the peer comparisons, a company called JB Hunt in its industry. Q1 revenues ex fuel, they said, decreased by 7% year over year. And income was actually down significantly, around 30%. They're saying due to a combination of lower volumes and yield pressure. Looking ahead, their management commented that they have not witnessed any material pickup in demand and believe that there's about 20% excess capacity in the industry. Now, I'll look at current valuations in a second, but there's some other commentary in the industry from a couple other businesses were similarly negative. Overall, the peer takeaway, near-term weakness continues. So the current estimates from analysts for TFI may be a bit optimistic. So let's look at the current valuations. We already looked at that. I'm going to summarize it right now. Current valuations, they look okay, but slightly above general market valuations. And this is an industry that has higher than average volatility and that is currently seeing weaker demand. TFI is a monitor in our research because of that. a sell-off of between 10 to 20% may be a long-term opportunity for this business, which has been a great capital compounder over time. Of note, the company will be reporting its Q1 fiscal year 2024 results this week, Thursday, April 25th. After the market closed, they'll have a conference call on Friday, and we will be monitoring that conference call. All right, that will end my segment there, and I'll stop sharing my screen.
Good. Yeah, TFI is a company. I've been following this company for years, particularly in our income research, our Canadian income research, and it's a good stock. It has over time been a great performer. I'm going to just say that I agree with your conclusion. I think it's fairly valued at this price. Long term, it's a good company. You know, somebody who's looking to hold it for 5+ years is probably going to do reasonably well on it. Now, some people will ask, well, what do you mean it's fairly valued? Is that good because it's fair? Fairly valued just means, you know, we don't see any real valuation opportunity in it. It's not overpriced necessarily. It's not underpriced. It just kind of be trading more or less where we think it should be, at least in the near term. So that would kind of more indicate it as a hold, particularly in the near term. But, you know, long term, I think it's probably gonna perform reasonably well.
And we were talking about earnings surprises and misses, or misses to the downside or upside. If this company were to surprise to the downside and it had a 20% pullback, you know, over the next 3 to 6 months, because the industry, generally speaking, isn't performing as well or seeing weaker demand, it has been a company that's executed well over the long term. It looks to be investing in the business in a downturn for the industry, and potentially can come out of that stronger. So we would be monitoring to see, okay, is it trading at reasonable valuations? Has it gone 20% below? And do we think we can buy it at an opportune time? So we might look at that over the course of this year. And if there is an opportunity and it trades significantly below what we call fair value, and then it has the potential to increase over that over the long term, then it would be a situation we might look at. All those things have to come together, though, for us to actually have a recommendation on the company. All right.
I was just going to add quickly as well, like if you're looking at these companies for the long term, something which is beneficial is they are actually growing their dividend over the long term. They've consistently done it. And that's
TFI,
something you'd like to, TFI. Yeah. So then you can, if you do end up needing to or wanting to hold it for 5 or 10 years, they might only have a yield of 1% right now. And if you're buying at a 20% discount from where they are right now, that would be what, 1.5%. And then you're holding it for what, 5, 10 years, they might double or triple their payout. So you're actually getting a decent yield by that time on your initial investment, which is always good to see as an option.
And that's why and like Aaron specific is always looking for dividend growth stocks, like companies that consistently grow that dividend over time. You may have a 1% yield, you know, if it's a 3% yield today, but if you look back 10 years and they're growing that, you know, anywhere from 5 to sometimes we see 15 or 20%, if they can really grow cash flow, your effective yield. We talk about this, and I think we'll do an upcoming seminar where we maybe talk about effective yield and how that can compound in your favor over the long term. But it's very striking in terms of the returns, and I don't think it's talked about enough. So it's something we should probably talk about, how powerful that growth in the dividend can be over time.
Yep.